Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Hi everybody, this week we have 3 interesting webinars lined up for you. First one is on the topic real estate versus equities. So in this webinar we'll be discussing about the pros and cons of the real estate market and also how you can allocate between real estate and equities. Second one is on good investing at bad times. So here we'll be discussing about investment strategies which can weather all market conditions. Third one is on will the US elections impact the stock market. So if you are someone who is confused on how the markets will react from here, do tune into this webinar. All the registration links are given below in the description. Do check it out. Hope to see you all there. Thanks.
How is your portfolio doing? As an investor in this market, you've probably noticed that the Nifty has been trending downwards for the last 6 trading sessions. So we've had a consistent fall in the Nifty. It's not been a very deep correction, maybe roughly about 2% in the last week or so. Yet it has put investors on the edge and they are a little nervous about what lies ahead. This is quite normal because we've had a very good phase in the market for a few years. Every little dip has been bought out of, and now investors are recognizing that drawdowns can actually be more sustained and prolonged, and there is a need to refresh the way that we're thinking about our portfolios. If we start looking at the data, what's happening at the index level has actually got investors a little bit concerned because we felt that this damage would be contained within the Nifty, but it's actually spread into the small and mid cap indices as well, which have cracked under this pressure. There's been a relentless amount of FII selling post US elections, and you've also seen the dollar strengthen, and this money has moved out of emerging markets as far as US investors are concerned. When we look at all of these trends and the stats about how our own markets are doing, many companies have missed their earnings estimates, forcing investors to rethink about valuations. If we also look at data points in terms of where stocks are trading today, we'd realize that almost 63% of stocks are trading 20% below their 52-week highs. So while it's still debatable about whether this is the bottom, this is fair value or not, the important thing is that we need to relook at our framework. We need to look at how to protect ourselves in this market. We need to think about how to prepare for volatility, and we need to structure a plan that allows us to save even when we're not in good times as far as the market tidying our portfolios up is concerned. So when we start thinking about all of these things, we'll realize that there is a need to shift our asset allocation. There is a need to rotate our sectoral choices, and there is a need to manage risk better in our portfolios. There is a lot of merit in following an approach that focuses on quality today as opposed to just returns, which worked very well for the last few years, but is unlikely to really help us in tougher times in the market. There are many ways for us to do a pulse check and understand how our portfolios are doing. Let us know how you are structuring your portfolio and changing it for this changing market in the comments below.